Today's subject is gearing. Hi, I'm Jeff Banks, the founder of Banks Consultancy.
And I'm Robin Banks, the CEO of Banks Consultancy, not your ordinary accountants. And these are our tidbits of the day.
As it's Tuesday in the month of March, we're here to concentrate on terms and acronyms that investors just need to know.
I get confused around people talking about gearing. It's obviously not cars, not with us anyway, not with accounting. But they talk about negative gearing being good and positive gearing being bad. What are they talking about?
Well, for a start, all that gearing is the correlation between the interest payment and the rent received.
So if the rent is $1,000 a month and the repayment is $2,000 a month, what happens
then?
then?
Yes, you're in a situation where you're in a negative gearing situation, only because the rent doesn't cover the repayment.
So passive gearing must mean that the rent of $1,000
Is the same
offsets my repayment of $1,000.
Exactly right. You're learning very quickly.
So why then are people so negative about positive gearing? I would have thought if the rent was $2,000 and the repayment was $1,000, everybody would be happy.
It depends, I suspect, on the short-term outlook versus the long-term part of your investment strategy. A negatively geared property will give you a tax advantage, hopefully against a significant capital gain down the track. Today, a taxpayer may be paying a marginal tax rate of 46.5%, and the negative gearing creates a tax deduction that they can get a refund from the taxman. If you look at a taxpayer with a significant income having a passive or positive property, then they're paying tax on that extra income, potentially at a much higher marginal tax rate.
I think I see.
Yep, different types of gearing can be relevant for different types of outcomes. In a superannuation fund, for example, which is in pension phase, positively geared properties can be an excellent contribution to the money required to pay the pensions, whereas, say, a discretionary trust situation, a passively geared property could allow the investment to just tick along without extra contribution or the quarantining of a tax deduction that can't be accessed.
So what you're saying is there's no one right answer when it comes to gearing?
No, and as always, if investors think they're in the firing line for this or any other situation in relation to the structuring of their property investments, they should contact Banks Consultancy, and one of our trained consultants will help them through the issues that they may come up against.
Okay, I'm off to ask about this subject too and research a bit more. I'm Robin Banks.
And I'm Jeff Banks, and we are
Banks Consultancy,
not your ordinary accountants.